the Underused Housing Tax Act, which I think is shattering the entire accounting world, or at least in my business, because I routinely work with people who are required, based on this legislation, who are required to do the filing. And they just released the filing form. And that's why we're like crazily scrambling to put the system together, put the human resources together, put everything together to make it work.
Yeah, I remember seeing the look on my client's face, Justin, who is an accountant as well, and he had no idea when you explained this to him what this was.
Yeah, it is a complicated thing. Although the intent wasn't to have any requirement for Canadian resident or Canadian citizen, Canadian permanent resident and Canadian citizen to do the filing, because they would be most likely exempted from paying the tax. But somehow the way that the legislation is written, now a lot of Canadians and a lot of Canadian corporations would be required to file the return.
So anyone that owns any property?
No, so it's only applicable to residential properties that are triplex and under.
Yeah.
And if you own a commercial property that has 3 units and under, you may also be dinged on it, depending on the use of your residential portion in comparison to the commercial portion. So those would be the affected property's owner. So like single family home condos, but only residential condos, not industrial condos or commercial condos. Yeah,
like this one that we're in.
Yeah, those would be exempted. But it's residential condos, semi-detached house, duplex, triplex, row houses, so townhouses.
So even a vanilla homeowner?
What's a vanilla homeowner?
The majority of Canadians that are just regular homeowners that don't own any investment property?
Maybe, maybe not. So depending on if they are an affected owner or not.
What's an affected owner?
So an affected owner includes Canadian corporation, private corporation, partnership. To a certain extent, it may also include joint venture relationship. So if, for example, if you have elderly parents and your elderly parents, to help them taking care of the whole house, the elderly parents say, hey, I need to add your name to the title of my house, because it helps me to handle all the affairs of the house. But you don't truly own that property. You're just being added for the purpose of helping out. The true owner is still the parents. With this type of arrangement, you're essentially acting as a trustee to be on title in trust for your parents. And under that scenario, because you're a trustee, you are now required to file a return.
Okay, so I don't think that's a very common case.
It is common because a lot of elderly Canadians would have their kids on their primary residence house to help them.
Okay, that's a whole other ball of wax that I don't want to get into.
I know it doesn't quite affect a lot of.
Because most people think automatically just do a power of attorney instead, but there's benefits of both, and again, it's not a conversation. I don't think we need to get into that today.
Well, but it's applicable as of December 31st, 2022. So if your name is on title December 31st, then you have a filing obligation.
So what if, like Adam, who is on title for his home,
yes,
does he have to file?
Well, if he is the sole owner and sole beneficial owner of the home, he's not acting as a trustee, then he doesn't have to file. But for average real estate investors that you and I deal with, they do a lot of joint venture. If you're in a joint venture relationship, you are the one that's on title, and you have a joint venture partner that's off title, then you are all of a sudden a trustee, then you would need to do the filing.
Okay, so only trustees.
Well, that's what they say. Right now, the trustee has to do the file, whoever that's on the legal system. But there is a second part that talks about, the legislation has a second part that talked about who are the owner. If you are the trustee, you're owning the property on title, you're the one that's on title, and you're owning it in trust for the corporation. The corporation is also the owner. So if you could be identified as an owner because you're a Canadian corporation that I mentioned which would be an affected owner, the corporation would still have the filing obligation.
Great.
So the corporation has it, and if you are the one on title, the individual would also has the filing obligation because the individual is acting as a trustee.
Okay, so trustees and corporations. Is that
Yeah.
where we draw the line in the sand?
And partnership.
And partnership.
Yeah.
Like,
And then non-Canadian as well. But then we don't have a lot of non-Canadians listening to the show. So
not many of our clients are non-Canadians.
yeah.
Okay, so non-Canadians, trustees, corporations,
Partners in
and
partnerships.
partners for investment purposes, or even like wedded partners.
So they specify as partners in the partnership. I always on my YouTube video, I actually mentioned the house that we kind of own together. The single family townhouse that I've always owned. It was my primary residence in the past. Throughout the years, I've always reported the income and expenses on my own personal tax return. But throughout the years, we refinanced that property a couple of times, and that property, and through that refinancing process, the bank require your name to be added to title. You're now a trustee. I've always reported that 100% income and expenses. There's no change from a tax perspective, but you're added for the purpose of mortgage. You're really owning it in trust for me. Mm-hmm. So all of a sudden you have that filing obligation because you're on title in trust for me. Now, vice versa, right? There are a lot of couples that one spouse, the high income spouse, is on title, but then the reporting is done by the husband and wife, both spouses together. Then all of a sudden, whoever that's on title is now a trustee. I don't know if that makes sense. Now then you understand the magnitude of how crazy this UHT, the Underused Housing Tax Act, implies.
I think we're blowing up every accountant's phone lines right now.
Not really. A lot of them don't know. But the reality...
Oh, no. Like, people are listening. They're gonna go call and ask our accountant what to do.
Yeah, absolutely. But
because they're all investors, so likely almost all of them have to... It sounds like pretty much anyone who owns an investment property will have to file.
Not really. No, let's use an example. If you and I are in a joint venture together for one of our student rentals, we're in a joint venture relationship together. Both of our names are on title, and we are joint venture. We're not partnership. If we call ourselves partnership, then you have the filing obligation. But if you call yourself a joint venture and your intention is joint venture, and you demonstrate evidence that you're operating as a joint venture, or you have a joint venture agreement signed, then there is no filing obligation because I'm a Canadian citizen, you're a Canadian citizen. You own 50%, I own 50%.
What is the objective of this new form?
So the objective, funny, because this is totally, what we just discussed is totally not consistent with the objective. The whole objective is to prevent foreigners to own Canadian residence and leaving it vacant or operating it as Airbnb.
Oh, they're on the hunt.
Yes.
This is the federal government.
This is federal government. It affects Canadian-wide.
Okay. Wow. So instead of asking anyone who's foreign owning and anyone who's operating Airbnb to identify themselves, they're asking everyone who's not.
It's the similar situation with like the Toronto vacant home tax, right? Like there could be a very small percentage of people who are leaving their Toronto home vacant.
Yeah.
But they're forcing everyone in the city of Toronto to report to the city of Toronto website that are you renting it out to someone, and on a long-term basis. And this happens in city of Toronto, happened in city of Ottawa, has already been implemented for a long time in Vancouver, and then the government in British Columbia also sent out another letter for them to do the filing. And this is on top of all of these, completely different.
I'm sure the CRA employees love this idea.
Yeah, it's crazy. I can't even tell you how crazy it is because the form was really literally released middle of January and the filing deadline is April 30th. And throughout the last 2 weeks, they've released 13 technical interpretations. Last 2 weeks. And what date's today? February 17th?
What percentage of your clientele do you think are affected?
I think all of them are affected. A lot of them.
100% of
I
the
wouldn't
500
say
plus?
I
Or
don't
close to?
I don't think it's 100% of it, but
95?
substantial amount would be affected.
80%?
Well,
Even if it's 80%, that's a lot.
sometimes it's in an implied relationship, right? Like we wouldn't know if it's a husband who's on title and then the husband and wife are both equally reporting the income and expenses. That is really hard to identify, right?
Right,
That's a trust
if
relationship.
you're not doing their personal taxes, yeah.
If we do their personal taxes, even then, like it's always been reported this way. We don't necessarily go back to the original purchase agreement every single time, right? How would you know?
So are your billings gonna go up?
Well, our liability is going to go up. So
lovely.
for non-compliance, for individuals who doesn't file and who's required to file, the penalty is $5,000. For corporations who are required to file and do not file, the penalty is $10,000. And if you don't file on time, they have the right to take away the exemption from the tax. And the tax amount is 1% of the fair market value of your property.
That sounds pretty serious.
Oh, it is serious, which is why like it leaves the entire accounting world scratching our head. The whole legislation is about 89 pages long.
Right. And you've spoken to your friends in the industry as well. Like, are they just as concerned as I am?
No, I am concerned. I think because it impacts our accounting practice so much, almost everyone. I wouldn't say almost everyone. I think 80-90% of them are affected, and we're trying to figure out how to raise this to our clients effectively and efficiently because we're also in the middle of tax season. Personal tax return deadline is also April 30th. This underused housing tax form also has to be filed by April 30th, and they just released the information. So we're like scrambling to get this thing done and get the message across. The most common misconception that our clients have, and they wouldn't even open my email because it says Underused Housing Tax Act, and in their mind they said, hey, my houses are all rented, they're not underused, and therefore I don't need to know about this. But it's the opposite. You just have the filing obligation even though you're exempted from paying the tax.